Income tax in Canada is a direct tax that a government levies on the income of its citizens. An income tax in Canada is a comprehensive account of the previous calendar year, which is January 1st to December 31st income and deductions, along with federal, provincial, and territorial taxes paid and owed. It also helps to determine if you're entitled to a refund from the government of some or all of the tax that was deducted from your income during that year. This video provides you with concrete information, so you would want to stick around till the end. Welcome back to our channel. Work-Study Visa provide 100% free up-to-date guides to help foreigners like yourself visit, study in, work in Canada or immigrate permanently. Canada is currently the welcoming country in the world and we're excited to assist you come here. If this is your first time visiting, please consider subscribing to our channel. That way you get first-hand information at no cost. Simply hit the subscribe button, share the video and smash the thumbs up to help promote our work. One more thing. Feel free to ask your question via the comment section and our staff will respond. Now, let's get back to the topic of the day. The income tax in the Canadian system is a self-assessment regime. Taxpayers assess their tax liability by filing a return with the Canada Revenue Agency, CRA, by the required filing deadline. CRA will then assess the return based on the return filed and on information it has obtained from employers and financial companies, correcting it for obvious errors. A taxpayer who disagrees with CRA's assessment of a particular return may appeal the assessment. Who should pay income tax in Canada? Every permanent resident of Canada is required to file an income tax in Canada annually. If you're a newcomer in Canada or have returned to Canada after spending an extended period outside the country, you may also be required to file an income tax return. When is income tax due? April 30th is the cutoff for turning in your individual income tax return and paying any taxes owed. Normally, if you're self-employed, you and your spouse or common law partner have until June 15th to hand your tax paperwork over to the Canada Revenue Agency. But you still need to pay any tax balances by the end of April. Income tax in Canada for permanent residents. If the Canada Revenue Agency, CRA, considers you a permanent resident, a factual resident, or a deemed resident, then you have an obligation to file income tax in Canada, as well as to report all of your worldwide income. You are also required to claim all deductions and non-refundable tax credits that apply to you. As individuals who spend a total of 183 days or more in a year in Canada or who are employed by the Government of Canada or a Canadian province, you're required to pay income tax. An individual may take into account their residency status under a relevant Canadian tax treaty when determining whether they are a resident in Canada. Tax for all provinces except Quebec is calculated the same way as federal tax. Form 428 is used to calculate this provincial or territorial tax. Provincial or territorial specific non-refundable tax credits are also calculated on Form 428. Thank you for visiting our channel. We hope this topic was helpful. Just before you go, please don't forget to subscribe, share this video and hit the like button. You can also visit our website for more resources, check the description below. Thanks for supporting our work.